You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. So I want to thank you folks for making the year on the site and on the network just such a wild year. So many of you folks discovering indeed the world of vol and in the entire network. It's been a great year. Literally couldn't do it without you folks. So I thank you all for downloading, streaming, subscribing, writing reviews on various platforms, engaging on social media, whatever you do. We thank you all out there as we move on into what's shaping up to be a pretty rockin' 2025. Remember, if you don't want your vol party to end with good old vol views, you want to come back to talk some more, man, we got some wild trades. We got some great payoffs of some awesome setups as well coming up in a little bit on Options Oddities with our buddy, the Oracle of New Hampshire, Mr. Matt. That'll be coming up in a little bit on Options Oddities. You want to get access to that, theoptionsinsider.com/pro. Welcome to all you folks who joined us over there on the pro during the holiday season. You make the Yuletide season that much more festive and that much more fun. Should be a banger, so stay tuned for oddities coming up after this show. And let's see who's joining us on this fine show right now. First, out to the wilds of the hinterlands of Chicago, where we are joined once again back from his globe-trotting adventures and suitably exhausted. None other than Mr. Dr. VIX himself, a.k.a. Mr. Russell Rhoads, now holding court over there at Indiana University, soon to be the Buffett Scholar par excellence. None other than Mr. Rhoads. Mr. Rhoads, welcome back to the show for the first time in the new year. Happy New Year to you, sir.
I was going to say, though, a lot of people lost money in a long-term bet about how long I'd live. Lifestyle-wise, there are a lot of people that didn't think I'd make it to 2025, so I'm just counting each day as a blessing.
Oh, a lot of action on the Russell death poll. I got to get in on that.
That's right. That's right.
I didn't know that was
Remember where we used to do those on the floor? I won it once with Benny Hill.
Oh, really? That was a while ago.
So
I remember the day Benny Hill died. A dark day for many of us fans of let's just say risque British comedy. All right.
Yeah.
Let's keep rolling. I was way too young to be watching that show. I don't know what I was doing, but that was
I think we all were.
A good show nonetheless. Couldn't come close to having that show on the air today. I'm just saying. All right.
No.
Now that I'm completely distracted by thoughts of Benny Hill, let's go out to, I believe, the wilds. Is it South Carolina? Maybe North Carolina. One of the Carolinas, where we are joined once again by our old pal, Mr. Jim Carroll, Senior Wealth Advisor and Portfolio Manager over there at Ballast Rock Private Wealth. Mr. Jim, welcome back to the show, sir. Which Carolina are you beaming in from?
South Carolina today, just waiting for what are we calling this? Winter Storm Cora to descend upon us. Rumors that we may actually see a couple of white flakes before it's over. So pray for us.
Yes, a dusting, and you folks go out of your minds down there in South Carolina. This market might be going out of its mind as well. Let's find out, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the year that was, and indeed still is, from a vol, or I should say year. We're going to get to the year in a second, a little bit of a foreshadowing there, but the week that was, and indeed still is, from a vol trading and trending analysis, all sorts of fun perspectives. And if you're a hardcore bull, if you're in the Uncle Mike camp, so far this year has been kind of off to a rocky start for you, and that continues again today, listeners. Jobs number coming in hot, spooking a lot of folks, maybe raising the ugly specter of the I word, inflation, perhaps not going away as most people hoped. Everyone for a couple of years now has been pricing in just massive rate cuts in the market. We know we haven't really seen those come to pass. Now the prospect of 3 or 4 this year, probably getting cut in half, maybe getting cut to 0, maybe even a raise, who knows? So the market's kind of spooked by the latest data, and that playing out there today. At one point, we were off about 1.5% in the S&P, threatening, maybe a little more, actually, looks like. And then we were threatening to break 5,800 in the wrong direction. As the show has begun now, looks like the sell-off has mitigated, at least for now. Is this the calm before the storm? Is this a little bit of a rebound before we plunge back down in the second half of the show? Are we going to end green? That's happened before. Let's find out. Right now, S&P off 1.25%. Dow and NASDAQ off about 1.33%. And our old pal VIX cash right around 19.25 when we kicked off the show. That's looking spicy, up about 2.5 points from where we were this time a week ago. We broke a 20 handle early this morning in VIX cash, got up to about a 20.31 out there. So things were looking spicy. Things were looking dire, especially as the S&P was threatening to break 5,800. Got down, looks like about 5,808 or somewhere in that range before rallying back up right around 58.40 to kick off the show. So a rollicking start to the new year, listeners. Vol also looking frothy, up about 12 points at about a 113 as we are commencing operations here. So everybody who picked a banger start to the year, I remember I warned you a few times, listeners. We come out of the gate like a lion many times recently, and it seems like, at least so far, 2025 is living up to the hype. Let's go out to the guest seat now. We haven't talked to him in a while. Our old pal, Mr. Jim. We'll get to all the fun year in review stuff in a second because there's a lot of it, listeners. But first, Mr. Jim, we're coming out of the gate hot this year. What's catching your eye this week from a vol perspective?
Well, we are coming out of the gate hot. You know, Santa Claus got shot down in flames. And, you know, there was some question as to whether we would bounce durably. But it would appear that bounces are short-lived. You know, we're seeing, you know, from a technical view, lower highs and lower lows in the S&P as we, you know, go from day to day. Every little attempt at a bounce seems to be short-lived. At the same time, you know, we haven't seen it crater. So we're kind of playing a game of ping pong, but we're playing it in negative territory. So it doesn't feel good. You know, we've got some stuff coming up. I guess our incoming president is officially a felon, but that doesn't seem to bother too many people. And, you know, we've got an inauguration coming. You know, it just feels like the market can't get its feet planted.
Let's keep rolling out here to the hinterlands of Chicago. Mr. Rhoads, struggling with technology as always, world weary, a few more stamps on his passport since last we chatted. First off, Mr. Rhoads, really quickly, where did you go on your globe-trotting tour? And then B, what's catching your eye from a vol perspective this week?
Amsterdam for 5 days and then Paris for 8. And my whole goal in Paris was to find a French derivatives trader and start a fight, but I couldn't find one. So I just did tourist stuff.
I could just picture, I would love the headline of that on some vol blog. Dr. VIX in brutal Paris melee with French Parisian
I will
VIX
be
trader.
paying for that trip with the 3 women that live in my household for a long time.
You took 3 ladies shopping in Paris. You're a brave fellow, sir.
Apparently, I'm buying their friends graduation gifts, etc. So there you go.
Wow. Okay.
A lot of negative cash flow on that trip.
And you thought doing it in winter would be a good idea.
I kind of did, but that just means they wanted to be inside stores all the time.
Well, let's talk about brighter subjects for you, sir. Maybe or maybe not.
Thank you.
But of course, you're a little bit bearish, so maybe this is a brighter subject.
Yeah, I'm paying for it with my short position.
Yeah,
in the
exactly.
SVIX.
I knew you'd like this.
Finally.
What's catching your eye this week, sir?
Just that a little bit surprised at it. The overreaction on the downside. It seems like when we get questionable numbers, everybody's waiting around for confirmation. But the way that Jim described market behavior, where we're getting lower highs and lower lows, that when that's the case, that's kind of a precursor to it not taking a whole lot to cause a sell-off, and that feels like where we are. What I find really humorous is I don't know of a lot of bulls out there going into 2025. And of course, I saw a headline when I was scanning news to play back catch up that said, why is nobody bearish going into 2025? Well, am I a no one? And I know there are a lot of other people that are kind of going to sit on their hands and hope to get better levels to invest for the long term. So that was just kind of a major thing. I was trying to price out the straddle from Wednesday in front of the employment number today, and I'm having a heck of a time with my computer hates me. That's all I've got to say right now. So I wanted to see what they were anticipating, because we didn't get much of a reaction back in November or December, and sometimes that will cause people to get caught a bit unaware when we get a big outlier move like we're kind of experiencing right now.
We are indeed, listeners. Before we keep paying off this week's activity, let's get to some more fun. We started this last week looking back at the wild year that was 2024. But, we have a lot of guests rolling through the hot seat here on Vol Views, and they have their own perspectives on the mad year that was. So let's get to a little bit of 2024 year in review. All right, everybody, let's do it here. We got to kick things off with our good buddy, Mr. Jim. When I think of our year in review shows, we got to bring on Mr. Jim to start the year, because when he's not talking to us, he's busy cranking away at numbers. He's kind of asleep at his keyboard for the first 2/3 of the year, but that last quarter of the year into the end of the year, man, he's crunching numbers. He's crunching data. He's cranking out reports. He's ready for his year in review time. So the spotlight is on you now, Mr. Jim. What do you think? You think we can call 2024 the year of 2 heart attacks, sir? Are you down with that?
I've been thinking back-to-back heart attack would be the tagline.
Or if you're a wrestling fan, you can go pink and black attack. A lot of ways to go with that, but I digress.
But 2024 was really a tale of two halves, because, the first half was very calm. Recall that I had dubbed 2023 the year of no fear. And certainly through the first half of 2024, people were sleeping easy. Then we had the little August eruption. And then we had the Fed-induced little December aftershock. And as remarkable as those two heart attacks were, the thing that was probably more remarkable was how quickly they faded. And I have kind of arbitrarily used 15 on the VIX as a dividing line. Some people might quibble with using any particular number. But those two episodes showed VIX going from 15 to the stratosphere and then back below 15. In the case of the August heart attack, it was, about 18 days from the crossover above 15 to the crossover back below. And, the December one was even less than that. I think it might have been 8 trading days or something. It was kind of a remarkable back half of the year, coming off of a long period of time where people said, VIX is dead, VIX doesn't matter, VIX is irrelevant. And I don't care whether it's VIX or VIX futures or whatever you want to look at. It seems to me that what we saw in these two episodes was a responsiveness in the volatility complex to moves in the S&P that was just remarkable and dramatic.
I'm glad you said that about the two halves of the year, because as I was looking over your data, I liked your catchy title of the two heart attacks, but to me, you're right. The data was pretty evident that it was a tale of two halves, a tale of 2 years, if you will. The first half of the year and the second half of the year. I cherry-picked some of your data, Mr. Jim. Feel free to take umbrage with the ones I picked. Let's look here first. Again, you should check this out for yourselves. I'm not sure, Jim, if you make this available publicly. Maybe if you email Jim over there at Ballast Rock, he will be kind enough to share it out with you. Or maybe if you send it to us, we'll send it to our pro members.
It will be showing up.
Oh, wait. Okay, good.
Put it that way.
Okay, good. Because this is good data. You want to get it out to the folks. But listeners, a couple of interesting nuggets to draw your eye to. For example, the first half of the year, VIX closes above 20. 20, a nice threshold, a nice barometer for madness in the vol space, listeners. None of them. No closes above 20 in the first half of last year. And then all of them, 20 of them in the second half of last year. So that in and of itself, that one chart alone says it all. It was very much a tale of two halves of the year. Obviously, a few things happening in the second half of the year. The election, a big one, but also the August 5th meltdown. And then, of course, that little dust up, whatever you want to call it there in December as well. We had a 200-day streak of VIX closing below 20. That ended in the second half of the year as well with the August 5th meltdown. So, again, a tale of two halves of the year. Only 8 closes last year, or I should say plus or minus 2% in the S&P. 7 of them in the second half of the year. Again, getting back to that tale of two halves of the year pretty much out there. VIX responsiveness to moves in the SPX. So your average VIX change per 1% SPX change increasing dramatically there in the latter portion of the year. You can look at a couple other measures, spot vol beta trailing over the last 50 days, all of them, again, feeding back into this narrative that they were two very different halves of the year. VIX futures all leading into that as well. The number of days that we were 46 of 48 days, listeners, that we were in backwardation this past year. All of them, pretty much, exception of 2, were in the second half of the year. So, Jim, I guess we could have just phoned it in for the first half of last year, sir, and really just brought out the big guns in the second half of last year. What do you think?
Well, I think, it's a classic. People look at what happened in August, and I remember the reaction that people had. Where did that come from? What the heck's going on? How did that happen? And because I think, the first half lulled everybody to sleep. And look, I think the other thing is, if you were actually paying attention on a day-to-day basis, there were, I like to say there were signs. Now, that's going from mid-July into the August spike. The Fed one was definitely more of a binary event. We're accustomed to seeing a little bit of all build up in advance of things like the Fed, jobs reports, whatever. That Fed meeting, they delivered what was expected of them in terms of the rates. But everybody said, oh gosh, they've turned hawkish, blah, blah, blah. And so we got that very dramatic kind of one-day spike. Which, again, that was a coin flip. Is the market going to go up? Is it going to go down? That one happened to be, market down, vol up. And that one was tough to wager on. The one in August, was actually reasonably well telegraphed. I mean, again, the other thing, from my perspective is that, with spikes like that, you really never know. Nobody ever knows how far and how fast. And that one happened to be very fast and very far.
I noticed amongst all your various data points, sir, a proprietary data point that I am not that familiar with. I'm sure most of our listeners are not as well. What the heck is VIX mix, sir? Break it down for
us. So people who follow me on Twitter have seen this. Some Twitter followers have followed me over to Substack, where I have begun to publish under the VIXology headline. And, I've been looking at all of these different pieces of the puzzle for years. And it struck me last year that maybe it made sense to kind of gather them and turn them into a composite measure, which I have dubbed the VIX mix. And, it looks at more than a dozen different volatility-related measures, and then equal weights them because, I'm not smart enough to say this one's more important than any of the other ones, and comes up with, a reading on a gauge. And in this presentation, one of the things I do is look at the year and to just divide it up into bear, neutral, and bull. And you can see how that played out over the year. And also looking at the August episode and the December episode and, what the VIX mix composite indicator was saying before, during, and after those episodes. So, I think some people might find it useful. I've certainly found it useful in my own work. And I will be publishing that on Substack. There'll be some snippets on the Twitters, and it might even show up in LinkedIn posts from time to time.
Man, everybody I'm talking about these days getting lured to Substack. Russell's already there. You're there. Talking to Dan yesterday. He's on. Everyone and their mothers. I got to get some of this Substack money they're throwing around out there. Substack. Check it out, listeners. Check out Mr. Jim's VIX mix if you want more. Stay tuned. Maybe he's going to put out that 2024 year in review, which is pretty interesting stuff. I know, Russell, you have some data points you want to get to as well. I think we'll get back to those on a future show so we can dig deep, because I know you have a lot of numbers you want to crunch for the year in review as well. But speaking of crunching some numbers, let's get out into the land of the futures right now, listeners. And what was going on in the vol surface as we kicked off the show here. Front looking a little bit juicy, a little bit bid out there. The cash hanging out right around 19 3/4 when we ran this, listeners. And that front Jan future right about almost 19.5, about a 19.40. That puts it up about 2 1/4 points from where it was this time last week. And the Feb coming up at about 1 2/3 points on the week. Also, weirdly enough, at a 19.40 as well. So no daylight at all between Jan and February out there on the front portion of the curve. Also weird, if you go all the way out the curve, you still can't sniff a 20 handle. The highest you get is about 1979 all the way out in September of this year, which is, again, kind of funkalicious. So, yeah, I think that's a good way to describe the curve today, listeners. Funkalicious. Mr. Rhoads, do you concur with that? Is the curve looking funkalicious to you today?
Flat, boring, like we don't really know what to expect. I think we are a lot of people. I keep getting media requests for how you going to invest with the new administration, and I was like, well, I'm not making any decisions until I see what he's actually doing. And I think there's that kind of wait and hold thing going on. Something else, it's interesting you mentioned September, because I right now with everything that's going on in the markets, the next rate cut appears to be pushed out to September. And they've got rates bottoming around 3.9 before I went off and spent more money than collectively my first 3 cars cost on stuff in Paris with my wife and daughters, who I love very much, apparently. Before I went off and did that, it looked like we were expecting rates to bottom in this cycle around 3.5, and maybe within the next 18 to 24 months. And now it's looking at maybe 3.95 or so, which that's not good for stocks. You know, I think there are a lot of firms on the corporate side that have been waiting around trying to hope that they could use lower interest rates to refinance, et cetera. The clock's running out on an awful lot of them, and I think there was an expectation that rates would be lower going into early 2025. And that should weigh on some corporate profitability. And I know I'm veering away from vol an awful lot and talking about fundamentals, but sometimes the negative fundamentals end up being the driver of volatility, because downside expectations in the market is really what drives volatility indexes. And I'm just really surprised that it's flat going all the way out till September, and that it's actually not higher, if anything.
Yeah, that's kind of making me raise my eyebrows and say, it's whenever we have a day like this, when the data points you're talking about and this curve is kind of ridiculously flat, you can almost put a level on it, listeners. And the bubble wouldn't move too much all the way out to September, listener. That's always kind of a little bit strange, perhaps, dare I say it, a little funkalicious to me. Mr. Jim, what is catching your eye in a eerily flat vol surface this week, sir?
Well, exactly that. You know, it's and today we're getting a little bit of what I call lift and separate. You know, the S&P is trying to rally this afternoon, and so we're up off the bottom. But man, at the bottom, I think we were actually slightly backward for a few minutes. And as Russell said, it's as though people just can't make a decision here. We've got the entire VIX futures term structure inside of one vol point, you know, from low to high. And that just is not normal. It's not necessarily terrible, but it's not normal. And, you know, it just says that folks are not sure which side they want to be on.
Does this give you the heebie-jeebies like it does us, listeners? Hit us up. Let us know out there. Usually something like that, and you expect maybe, you know, we're in a quiet period. Maybe it's midsummer, not much going on in the market. But, you know, there's stuff going on right now. And the fact that we're so eerily flat, I suppose you can call it, does kind of give me a little bit of the old heebie-jeebies, the spider sense, the hairs on the back of my neck starting to stick up when I see stuff like that. Is that being reflected in the overall VIX options world today? Let's find out. Is it a banger day in VIX options? You know, the answer is it's decent. It's, dare I say it, more than respectable out there. 614,000 contracts on the tape right now. The ADV 731. That's going back in the right direction, up another 39,000. We were back below 700K. Again, it was that time of year, listeners. December, not usually a banger for VIX options, but seeing that come roaring back to life right now. And 614 on the tape today. Nothing to sneeze at either. In terms of the top 10, we're still hanging out at our usual structure these days, which is 8-2 calls over puts. In our proprietary VIX top 10 metric, I need you to incorporate that in next year's report, Jim. Our proprietary VIX top 10 metric and how it evolved first half versus. I think there's some interesting data. The hell with VIX mix. It's all about the top 10, baby. But I digress. All right. What does it cost you to break into the top 10 listeners in VIX options out there? 190,000 contracts exactly. So not bad. That's also respectable. That gets you to the March 20s. Also, dare I say it, a respectable strike-in month. Wow, we're kicking things off in a respectable fashion. We go back number 9, 196,000 of the Jan 15 puts. those got a bit of a ways to go after today, but, not the craziest thing we've seen. Number 8, 214 for the Jan 22s. Number 7, 222,000 of the Feb 19s. Also, dare I say it, respectable and looking a little better today than they were last week. Number 6, 224 of the Jan 50s, 5-0s. Number 5, our second of 2 puts in our top 10 this week, 247,000 of the Jan 17 puts. Number 4, 268 of the Jan 20s. Number 3, 274 of the Jan 30s. And the big dog in the VIX realm, well, the second biggest dog, I should say, close to the top of our list, we have the Feb 60, 6-0s, 289,000 of those, followed by number 1, 323,000 of the Feb 30s listeners.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
It's an interesting list of trades based on what we're seeing on the curve. And most of the trades, I had a heck of a time finding any trade using weeklies in January that was expecting a move higher. It's a whole lot of buying puts. And so Monday this past week, we had somebody buy a bunch of the January 8th 15 puts for 6 cents when VIX was at 16. We had somebody buy a bunch of the January 8th 16 puts when VIX was just over 16. The VIX settlement on Wednesday was 18 plus. I think some of those trades were based on people thinking there would be a headwind because of the holiday that we got on Thursday. But you're not going to really get a headwind when the first day after the holiday is an employment number. And I really wish I had thought that one through. I just really you've made fun of me multiple times on this program about how fixated I get on the calendar sometimes and the impact on VIX with the calendar. So if anybody should have taken advantage of that, I should have. It's a lot of 15, 16, 17, 18 strike put buyers with near dated options. One person with VIX up around 1850 bought 800 of the February 18 puts, and they paid about 220 for those. You still got to get VIX back under 1580 to break even on that guy. The only bullish trade I came across, and they did it Tuesday, and then they did it again on Wednesday. We were closed Thursday, right? Because I wrote Thursday on my notes, and I know that's not right.
We were, sir, yeah.
But somebody did buy 300 of the January 29th 30 calls for 60 cents when VIX was at 1725. And you'll love this. They bought 300 more the next day at 65 cents. When they traded them on Tuesday, VIX was at 1725. When they traded them on Wednesday, VIX was at 1916. So they basically are only paying a nickel more, even though VIX had gone up almost 2 points. Thought that was kind of, there was the open interest was all their position, and you just didn't see the bid side on those going up when VIX went up. Imagine that.
No bueno, sir. You like a little bit more of a pop. If you're the only OI, you like to get a little bit more. But alas, the market maker's fading him to hell in high water.
Yep.
Let's see what else we saw out here this week, listeners. Let's go out to today. 614,000 contracts on the tape. The big dog, 50K of the Feb 40s, 4-0s, followed by number 2, also 50K, 49.8 thousand to be precise, of the Jan 30s. Looks like we got a bit of a Jan 30 Feb 40 roll cooking. Maybe listeners, it went up 47,867 times. The 30 calls in Jan for 49 cents against the Feb 40s for 64 cents. Obviously doing the whole thing for 15 cents. Now, you'll see earlier this week a whole boatload of the Jan 30s traded for 49 cents. So they could be rolling some of those already. It'd be an early roll to do it, but we have seen weirder things, and they could be piling on to the position and then also throwing on some Feb 40s for a good measure. Either way, that's number 1. Number 2. Number 3. 47,000 of the Jan 21s. Number 4, 22,000 of the Jan 24s. And number 5, 18,000 of the Feb 15 puts. That 15 strike has been popular. And going out to Feb now to keep the party going. Thursday closed, obviously, for the Carter Memorial Services. Wednesday, 618,000 contracts on the tape. The big dog, 34,000 of the Jan 18 puts, followed by number 2, 25,000 of the Feb 18 puts. Number 3, 21,000 of the Feb 15 puts. A put palooza to kick it off on Wednesday. Then we get some upside. Number 4, 20,000 of the Jan 30s. And 16,000 for number 5 of the Jan 35s. Tuesday was the banger, listeners. 1.45 million contracts on the tape. We had a massive kind of funky print going up on Tuesday, listeners. It involved 174,000 of the Feb 30s, 168,000 of the Jan 30s, 168,000 of the Feb 60s, and 165,000 of the Feb 50s. So add all that up and you got a boatload of paper, listeners. Looks like they did the Jan 30-50 vertical. Remember I said before they were trading the 30s a lot. Again, for that same price, 49 cents. That seems to be the magical price this week for the Jan 30s. And looks like against that, they definitely bought the Feb 30-60. They did those for 99 cents and 32 cents, respectively. So obviously 67 cents for that vertical. They did that 80,000 times and they came back in. Looks like they did it one more time out there. Definitely opening on the Feb 30s and the 60s, which is why we think it's a roll. The Jan, again, there's size OI on both, but it does appear to be probably rolling, which, again, we've seen weirder things out there, but that attributes and accounts for a lot of the size we saw on Tuesday, listeners. And then Monday, a respectable day, 561 on the tape. The big dog, 45,000 of the Jan 15 puts. Followed by number 2, 31,000 of the April 40s. Number 3, 26K of the Jan 17 puts. Number 4, 21,000 of the Jan 16 half puts. And the number 5 spot on a decently active Monday, 18,500 of the Jan 17s. Mr. Jim, before we roll on, anything catching your eye in the realm of VIX options this week, sir?
Nothing really jumped off the page at me, Mark, to be honest. I'll keep it short.
You were too busy cranking out the VIX mix. I got you. I see where you're going out there. All right, let's keep rolling out here to a product I know Mr. Jim likes to watch, and also Mr. Rhoads likes to hold in his hot little hands. This is, of course, a good old SVIX, a.k.a. the land of inverse volatility, listeners. As we kicked off the show, SVIX hanging out at a 23.25, down about 2.5. As we're getting into the latter portion of the show now, it has gained about 0.75 of a point. It is at about a 24, which puts it down about 1 3/4 points. So getting a little bit frothier out there. What is also getting frothier out there is the volume, which is good to see because this name has been, I think, languishing is putting it mildly out there from an options volume perspective. We're seeing 7,500 contracts on the tape today, which if it sounds like a lot, it's because it is. And the ADV is back up to a mildly, not, I won't quite say impressive, but at least mildly respectable 7,700 a day. That's up another 1,200 from this time last week. Mr. Rhoads, we'll start with you, sir. I know you're a big fan of owning some SVIX, overwriting calls against it. What's catching your eye in the land of SVIX right now?
The smallest position in SVIX that I've had in a long time. Sorry, Jim. And it's really just a matter of I'm very much in a wait and see mode. If it's above, it's not going to. The rest of it's not going to get called away from me because I sold 26 calls, but I'm thinking about selling some puts and end up having to own more of that guy to try and work myself back into a full position. And everybody's aware that is paired with a short position. I say everybody's aware. I just talk about it ad nauseum, but that position is combined with a short SPX futures position, and my delta goes up and down based on how weighted I am in both of them. My delta's a -6 right now, if you want to know how bearish I am. So there.
Ooh, a whopping -6, sir. Don't get too
-6. Yeah, I just I don't want to buy SVIX here because I think more is going to happen. And I'm definitely loading up on my UVIX over the weekend and for the weekend like I always do. I know we're short on time, but I did do an update around that with my weekend review last weekend. I just ran the numbers on UVIX just to see how it, after I kind of came up with that little weekend thing, how it did. Definitely benefited from a couple of volatility events toward after July, and the average after July was like a plus 0.71% per trade. But if you missed one, it was like 0.11.
Yeah, if you missed August 5th.
Yeah, if you were, let's say, traveling on August 5th like I was, then you missed out on the best one of the bunch. But I digress. I'm not bitter at all.
And I did take that number out to figure it out. I was like, I wonder if it would have been a loss if you just didn't catch that one day. But that's what long volatility strategies are supposed to do. Not lose too much and catch the spike every once in a while.
Like Russell's not bitter about his spending on his Parisian trip. I'm not bitter about missing the August 5th. Not at all.
I need a volatility event.
Mr. Jim, anything catching your eye in the world of inverse vol or even levered vol and UVIX this week, sir?
Well,
I'm sorry.
No, talking about, SVIX and its options, I think the challenge for SVIX being the 1x short vol is that, it continues to compete with the option chain on UVXY, and probably even VXX. So I tend to believe that the users of SVIX are just that. Maybe they're overriding the way Russell does, but my sense is that SVIX is being used for the underlying, for the 1x inverse exposure to VIX futures, and people who want to play the options are playing the options in the levered long products.
And all of you folks were playing last year in our volatility crystal ball game. You ran out of time last week to pay it off. We're not going to do that to you this week. You've been hanging out on pins and needles to see if you won last year. So let's get to it, listeners. It is time for our annual crystal ball volatility contest winners. Here we go.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to a very special edition of the Crystal Ball, one that I know a lot of you have been waiting, dare I say it, all year for. We kick off the year every year, listeners, with our Crystal Ball guessing game. It's always fun. We ask you to put on your finest vol prognostication goggles and gaze all the way out to the end of the year and say, hey, where do you think VIX is going to go out at the end of the year? And a whole bunch of you, thousands of submissions last year. Our producers really loved crunching all that data. So they're very happy with me that I'm doing it again this year. But you know what? It's really fun. We like it, listeners. So yes, a whole bunch of you came in last year. And we kicked things off with something a little bit easier that everybody can play in. Even if you're not comfortable giving a guess for the end of the year, you can play in our VIX poll. And we gave you a poll last year. Where do you think VIX is going to close? Between 12 and 16, where it was, I should say, when we kicked off the year last year, when we wrote that poll. A little bit higher, 16 to 20, north of 20, or below 12. And 36.3% of you got it right. You said 16 to 20. We did go out, listeners, 1735 in the VIX cash. That's the number we're going with. So anybody else who writes in who's angry about what number we chose, we're going with the close of VIX cash according to its creator, the SIBO, as of the end of the year. So 16 to 20 range was the right answer, 36.3%. 30.1% of you chose a little bit quieter year, 12 to 16. We certainly were hanging out there for a lot of the tail end of the year, but then we got spicy with Jim's second heart attack kicking things off. Speaking of spicy, only 14.2% of you thought the year was going to end north of 20, and 19.4% of you were predicting a pretty boring end to the year, below 12. Seemed like we might get there early on in December, and then, like we said, other events intervened. Along with all of you, and we'll get to all of your guesses in a second, listeners, we also have our network guests and our co-hosts play along. It just adds to the fun. So we had a bunch of people weighing in on the network last year. We'll get to a bunch of them here. We had Scott Bauer from Prosper coming in. He was at a 15.5. Rich Excel been on the show many times, 19.99. A buddy Dan, the man, Graham's on Twifo quite a bit, 11.5. He was feeling 11 double. He was feeling a quieter year. Mr. Jam Croissant over there, 18.27. He was feeling spicier. The Meatball was feeling 13.31. He also guessed an SPX close of 49.5. So no bueno there. We had Mr. Matt from Orats will be coming up a little bit later on oddities, 14.95. No joy for him either. The Rock Lobster, 14.25. Uncle Mike was feeling a quiet end to the year at 12.08. The Flowmaster, Mr. Schwartz, a lot of people in the 14 handle, 14.5 there. He also picked an SPX close. He was close to where the Meatball was, 50.5. So both of them over 1,000 handles off, it turned out. We're pretty close to it. Mr. Passarelli was getting a little closer on Options Bootcamp, 16.31. The second closest, listeners, was yours truly. I was at a 16.97. Like I said, we closed at 17.35. So I was a whopping 0.38 off. Not within our margin of victory, but dare I say it, respectable, especially when you consider nobody else on the network was closer, with the exception of one person who's just on Vol Views with me a couple of weeks ago. He's been eerily precise. In fact, I think he kicked off the new year with a crystal ball as well. This is our buddy Steve Sosnick from IB. He was pretty much within crystal ball range. He was at a 17 and a quarter. We ended the year 17.35. So we have to tip our cap to Steve. Yes, 17 and a quarter. So Steve Sosnick taking it out there. Oh, who else? Chris Sidial joined. He said 18.5. I don't know where yours is, Jim. And I don't see yours here, Russ. I know we have yours, but I don't see yours listed here, which means they're probably even farther away. So no joy good joy for Steve, I should say. He crushed it. And I will say I won't take a full bow. I will take like a half bow, a curtsy, if you will, because getting within 0.38 at the end of the year, at the end of the day, no mean feat, and nobody else, with the exception of Steve, was able to pull it off. So I'll take that. Listen, I guess I'm dialing in my crystal ball gauge pretty well out there. So what do you gentlemen have to say for yourselves? Unfortunately, no feather in the cap, no trophy, no Vol Hall of Fame for either of you gentlemen.
Oh, well.
I didn't participate.
I don't see your number there, which is to me is
yeah,
crazy.
no. Well, I wasn't on in the fourth quarter of last year much with you guys, and then you brought me back. So that's probably why I wasn't.
We didn't like you for a while. That's right. So we
that's all right. You put me in the penalty box, or it's your producer that puts me in the timeout penalty box for months at a time.
Hardcore. Don't
for
F
slipping through with F-bombs, etc.
Do not F with her. But you know what, listeners? Now it's time to get to the part you have been waiting for. Drum roll, please. All right, here we go. Again, we had a lot of submissions for end of the year. You folks were all over the place. 13.5, 23, 72, 17. Some guy picked 150. I thought that was going to be the highest, and someone else topped him at 300. So you folks were feeling your oats. You had prognostications from the 8 handle all the way up to 300. So it was a wild year in VIX prognostication. But at the end of the day, we're pretty demanding with this, just like with our hosts, just like with our crystal ball game every week. Just because we move the goalposts out a full year doesn't mean we change the margin of victory. It's still a 1/10 of a point. We're pretty demanding on this. I mean, I demanded of myself. Everyone else has to do it as well. Steve got it through the uprights. Can anyone else pull it off, listeners? Can anyone enter the Volatility Crystal Ball Hall of Fame for the year that was 2024? And the answer is yes, listeners. Some of you folks, eerily precise. First off, we have our boy here, Nico, or I should say precisely, Nico 2970958. That's a catchy handle, Nico. He was at 1741, so that puts you 0.06 away. So winner, chicken dinner for you, Nico. You are now an entrant into the Volatility Crystal Ball Hall of Fame. Congratulations to you. And then also rivaling you, actually closer, by just a hair. So if we were only given one prize, then Cozy Coconut, to be accurate, Cozy_Coconut, 88 would have taken it. He said, something tells me sub 12, but it's a good thing you didn't listen to that little voice in your head, Crazy Coconut, or Cozy Coconut, I should say, because he said, I'm going to go 1738 instead. Bam, you are 0.03 away, Cozy Coconut. That is very, dare I say it, extremely impressive on the year out there. So, gentlemen, I was thinking, it's very rare we have one winner, let alone two, getting within a 1/10 of a point. That is no mean feat. So I was thinking about a good prize to award our folks, in addition to being inducted into the, as we all know, the most prestigious award in the volatility space, which is, of course, the Crystal Ball Hall of Fame. I was thinking, what's the most valuable prize we can give them? We can give them a nice pro trading crate. Those are pretty cool. They can get pretty valuable, some of the stuff that goes in them. But we give one of those out a month. It's not exactly unique. And I was like, we can give, a month or the pro or free 3 months of the pro. I was like, that's cool. But I was like, what can we do that we have never done before? So we are going to give away 2 prizes worth a whopping $600 each. You folks are costing me $1,200. Nico and Cozy Coconut, our producers, will reach out to you. And you folks are both going to win a free entire year of the Options Insider Pro. Again, that's worth $600. So no cheap prize out there, but you folks earned it. That is an impressive feat. Our producers will reach out to you to confirm your prize. Congratulations to you. Now, I have questions for you two gentlemen. We have some folks here who were on the cusp So I want to ask you, what should we do, or should we ignore them entirely? For example, bearish account. He came in at 17.24 for the close and 35.13 for the high. So he was 0.01 outside our margin of victory. It closed at 17.35. He was at 17.24. And then we have BSS. This is Barinder Sangha. He was at 17.61. He was close too, but I'm farther outside. And then Parsikny. He was at 17.59. Oh, our good buddy Frank in the pro. I think he's there right now. 17 and a half. 0.15 away. Well done to Frank. I think we'll have our producer reach out to you in the chat. You get a bonus for being a pro member who gets so close. But what should we do, listeners? You two can be the arbiters, Mr. Russell and Mr. Jim. We got somebody who is 0.11 away outside our margin of victory. What should we do with them?
This is a tough call. I don't know if I can take responsibility for this. I could get some hate mail. Somebody might, come after me.
Welcome to my world.
Chicago.
You got to make the hard call. Mr. Rhoads, what are you saying? What should we do with bearish account?
Give him a Procrate.
A Procrate. Oh, that's very nice of you. That's very nice. And you know what? He said Procrate. I'm going to one-up it. I'm going to cost myself another $600. I'm going to say,
look at you.
Bearish account. I'm feeling generous. Santa came early this year, listeners. So we're going to give away 3 winners. It's so close. I hate to take it away for 0.11. Don't count on this all the time, listeners. If you're 0.15 away or something like that. But I'm so nice. I just cost myself $1,800. Well, that's awesome. But you know what, listeners? I appreciate all of you who take the time to play. We literally couldn't do this network without you folks. So yes, 3 winners. My goodness. Whoever would have expected that? You folks are eerily precise. Dare I say it, prescient on the vol front. So producers, also reach out to Mr. Bearish Account or Mrs. And you too are going to take home some fabulous prizes. Wow. So now we're talking crystal balls, and spoiler alert, it was myself and the Rock Lobster on the show last week. I was at a 15.76. The Rock Lobster was at a 15.5. So no joy for either of us for this week. So we're not gonna focus on that. Instead, we shall focus on, first off, where will VIX be next week? And then, gentlemen, I know, Jim, you've already played. Russell, I don't think you have played. So if you want to send in a prognostication for where VIX will close at the end of the year, so you could be officially tallied in our game/crystal ball challenge of the year, have at it. Jim, we'll start with you. What are you feeling for VIX next week? And then we already have your end of the year prediction. You came in early at 23.72, so you're feeling a little spicy. Dare I say it? It goes peppery end of the year.
Don't I still have the highest one?
Maybe. I'll have to go look and see.
I think I might.
You might be. You're feeling ghost peppery. So a spicy end to the year. Interesting. What are you feeling for this time next week, sir?
What the heck? I think this time next week we're going to calm down a little bit. I'll go since Sebastian's not here. I'll do his palindromic nonsense. I'll go 1661.
Leaning on the old palindromic nonsense. The broken clock does hit once a year or so usually. So if you keep it up, Mr. Jim, maybe you get some good goodies for you on the vol side. So yeah, are you joining Jim at the end of the year? Are you feeling a spicy end to the year? I will reveal the standings in our poll in a few seconds, listeners. But we went a fun way this year. We added a little bit of flavor to the VIX trajectory for this coming year. So if you're feeling a spicy end to the year, dare I say it, Ghost Pepper, get over to our poll. Mr. Rhoads, I crushed it on the VIX end of year. It didn't do so well on the VIX weekly crystal ball. So you get the joy of going next. What are you feeling for this time next week? And then if you can dare hazard a VIX close for the end of the year, what you got?
For next week, we actually, earnings season kicks off next week, and we get the five of the big banks. I don't think that's going to go well. So I'm gonna, but just because Mark Sebastian's not here, I'm going palindromic as well. I'm going to 1881 though.
Damn, he's inspiring everyone with palindromic nonsense. And do you have an end of?
I've got T-shirts printed up for all of us that say palindromic nonsense.
Oh, I'll take one.
And we're starting a band. That's such a good band.
Oh, I like it.
That'll get an interesting crowd. I don't think we get a VIX crowd. I think we get a lot of, let's say, linguists in the audience out there. They might be disappointed when they see what we're talking about. But what is this stuff? No palindromes. But I digress. Mr. Rhoads, sir, what are you feeling for the end of the year crystal ball extravaganza?
I'm going to go with 1331.
Oh.
Ooh.
You're going palindromic again. Wow, you've been in.
Well, everybody forgets how low volatility was for the first couple of years in the Trump presidency. Shockingly so.
Yeah.
So
no,
I'm going to kind of go with that one again.
Yep.
You know,
the year VIX went to die.
Yeah, let's hope we don't get a repeat of that. So far, we're not off to that trajectory, but you're right.
2017 was fantastic. Are you kidding?
Unless you're looking at the broad options market as a whole and industry as a whole, in which case a lot of firms went to die. It was no bueno on the broad spectrum. But I digress. We can discuss that on another show, listeners. So Russell's at 1881. Jim's at 1661 for next week. And Russell for the end of the year is at a 1331. Let me get my prognostication in for next week. And we do have earnings next week. I don't think they're going to be amazing either. I'm not sure if I'm feeling quite as spicy as Mr. Rhoads. I'm going to say 1776, an excellent year for our nation, and also a good vol prognostication for this time next week. In terms of longer-term vol prognostications, listeners, like we said, Jim, I think he's running the top of the game right now at 2372 in terms of our network hosts and guests. Kevin Green has already weighed in. He said 1785 with a high of 63. Ooh, getting spicy. And a low of 12.2. Our buddy, Mr. Passarelli, he chimed in at a 1695 for the end of the year. Noel from Convex, who's been on many times, he just chimed in with a Buffalo. So he's going with our Buffalo range, but he was too scared to hazard an actual guess. And Mr. Rhoads getting in there now at 1331. I know Matt has already weighed in as well. I'll have to get his prognostication for the year and add it to the official tally. We will get more official tallies. We will keep the poll expires next Tuesday, listeners, but we will keep the prognostications going all the way through vol views of next week. So you get a full additional week to think about it and make your prognostication. Remember, you get 3 swings at the bat this year. You get VIX close as well as the high and the low for the year. So you hit one of those 3. You're going to take $600 out of my hands. So go for it. You took me for $1,800 this year. You folks are doing well. See how much you can take out of my hands this time next year. Speaking, by the way, of how our poll is shaping up, Jim is far from alone, with our folks choosing the Ghost Pepper range north of 20 to end the year. Exactly a third, 33.3% right now, followed by number 2, the Spicy Habanero range, 16 to 20, 32.4%. Then the Mild Buffalo range that Noel from Convex was going for, 29.6%. Only 4.6%. I think it's going to be a very bland oatmeal type of year. Remember, reply or DM to that post, listeners, with your specific vol prediction. Our buddy Mr. Rich Excel, who's been on, he's at 1492. We'll have to add him to the list. A good year to discover America. Is it a good vol prognostication? I guess we'll find out. Get over there at options. It's pinned right now, listeners. Make your voice heard. We will keep the DMs and the replies open for another week so you can get all your guesses in. Then we will shut it down and we will see if a whole bunch of you can clean me out again this time next year. Speaking of time, we are out of it for Vol Views today. Listeners, I want to thank all of you for joining us here as we go around the horn. Mr. Jim, we will start with you. If folks are intrigued, they want to check out VIX Mix or maybe get their hands on your sweet 2024 Vol Year in Review, where should they go? What should they do?
It's easy to find me on the X Twitter thing at Vixologist. Substack is vixology.substack.com. You can find me either one of those places, and I'm not sure where the full 2024 review is going to show up first, but keep an eye out.
Keep an eye out there. And Mr. Rhoads, if folks want to keep an eye out for all your goodies, where should they go? What should they do?
Just follow me. Follow my Substack if you want to get weekend reviews and earnings earnings previews, and then kind of trades of interest. And it's just my name .substack.com, and everything I do, I put that there on Twitter. Next week, I'm actually doing a short-dated index option review for the folks over at Interactive Brokers. Sign up for that and hear me talk about how difficult it was in 2024 to be an option seller for the short-dated options.
There you go, listeners. Check that out for yourselves over there at IB. Check them out on the old Substacks as well. I did just find, while you were talking, Mr. Matt's prognostication for end of year vol. He's at 1467 for the end of the year. And then Rich Excel, a lot of 14 handles, 1492 for the end of the year. We shall see who is correct. Listen, speaking of Matt, he will be joining me in a little bit. So if you're hanging out in the live, stay tuned. I'll be back with him. We talked about a bunch of interesting trade ideas on his last appearance. We're going to see how those worked out coming up in a little bit. And there were some funky ones there. Calendars, 1x2s, ratios, all kinds of good stuff. Let's check it all out coming up on Options Oddities in a little bit. Remember, if you want to check that out for yourselves, theoptionsinsider.com/pro is the place to go. And if you are one of our new members of the Vol Hall of Fame, either Cozy Coconut or Nico, or honorable mention goes to our buddy here, Bearish account, all three of you, you can access that for free. So congratulations to you for being extremely, dare I say it, scarily precise in your vol prognostication. See, listeners, you can win if you play. So get your predictions in now for our 2025 game. It is live as you hear this. That's going to do it for us. Thanks to all of you who joined us throughout the week. Again, back again for a little bit of Options Oddities. Then we're back again on Monday for the old OB, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.